Logan, you see some similar things in the tea leaves, I think. Although we're at levels that do reflect not a lot of supply and quite a bit of demand still.
Well, rental vacancies have been falling for many years, just like total inventory for home buying. But the laws of big numbers play out. Supply is increasing. Even though wage growth has really picked up, the growth rate of rent inflation simply can't sustain itself. And on CPI Tuesday, core inflation is so much. Shelter inflation is about 43% of the component, 25% of that is rent. So it lags the CPI data, but I think it'll be a bigger story in 2023 when rent inflation, the growth rate, is slowing. Historically, shelter inflation doesn't go negative nationally, but I think it'll be a positive story for the United States next year.
Like so many things, Logan, it's supply and demand. It's pretty simple. Everybody should take an economics course, I think, at some point. So supply, maybe there's some more multifamily housing coming. Demand, we need to gauge whether the Fed continues and whether we go into some type of slowdown or recession. And that's the only way. You got to look at both sides, don't you?
Yeah, you know what? The Fed really can't do too much in terms of getting multifamily construction out there. I know raising rates might not help that in the future, but we've been building a lot of apartments, especially in the last 2 years, and some of that is coming online. So the markets that are cooling off that might be red flags are the markets that I'm excited about because more supply is coming up. Of course, the best way to deal with inflation is to bring more supply on to impact that. So that, I believe, is currently happening. We won't see it in the CPI data until, probably 6 months from now, but it is a positive for the United States.
So does the strength or weakness of a local market depend on just how attractive the area is for job growth? What are the best areas? What are the worst areas?
Well, the areas like Phoenix that had so much migration, even the parts of the U.S. that had so much migration in there, those areas were not ready for that much people moving in and employment. So, and those wage gains or those incomes that came into those areas that really pushed not only home prices but rent inflation, that typically can't sustain itself for multiple years. So the growth rate slowing down should have been expected by everyone. And I just think naturally when you get more supply into the marketplace, that's going to help it as well.